Good morning, dudes and dudettes. I wanted to have a conversation about how to look at the stock market and general things for people's advice. Obviously, this is a little bit outside of the typical content, but something that I believe is very important for us to understand as young adults. So, what I want to get at here is just some basics. This is the most basic thing you could think of and what you need to understand. So, first off, I'm going to say that the vast majority of this information is for young people who have certain risk tolerance. There's essentially three main type of investors. Investor type number one is going to be one that invests only into very low risk, high reward assets, such as the SPY or the top 500 largest companies inside of America. There's also other basic ways to invest. There are many other options to invest into, which is going to be things like the NASDAQ or the top 100 companies. You can be much more broad, where you can do the VT, which is literally every stock essentially in the world. The VTI, which is the total stock market, which is all of America's stocks, not just the top 500. There's tons of these. This is going to be your bread and butter. I am saying that about 90% of the population should be investing into essentially just the VTI, the VT, or VOO, which is going to be essentially the SPY just at a cheaper amount of money. This is $700 per share versus the VOO, which is going to be a little bit less than that. It's owned by a company called Vanguard. You pay a very, 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 very small amount of money, and you get access to the top 500 companies in America. With that, this video is not for those individuals. I'm going to say for 90% of the population, just invest into these three: world stock market, the total stock market index, and the S&P 500. And then forget about it. My suggestion for young people is going to be very simple, that instead of buying a product that is going to lose value, buy products that make you money, essentially, or create value, whether that be investing in yourself by taking online courses, whether that be investing in yourself by learning a new skill, or whether that be investing in yourself by creating essentially a safety net for later in life. Now, if you're in that 90% of people, just do that. Do not put too much risk into this. If you are young, that's what you want. Now, for the other 10% of individuals that are younger, that maybe want to have a little bit more risk, maybe strategically gamble, essentially, is going to be what I'm talking about today. So for today, I want to talk about how to understand what stocks are going to go up, what stocks are going to go down, and have a general idea of market heating up or cooling down. And the way we do that is by looking at something called the VIX. All right. The VIX is the volatility indicator. This is essentially saying how up and down the S&P 500 is. So what the VIX is doing is, as people sell more stocks, or as there more movement in the stock market, the price goes up. As you see, this is a humongous growth, right? There is obviously something going on during this time frame. If you go back to 2020, clearly you see the COVID pandemic is right here. It's very easy to see. When the VIX goes up, the US stock market typically goes down. I want to zoom in to a very recent time frame, though. This recent time frame is going to be this here, from February 12th to about March 31st, is where we can see the VIX has a general elevation. We see this general incline going basically directly up. If you just take kind of the low points, it's pretty easy to see. You can see this line here is that I looked at previous highs. These are highs, and then these are lows. That we can see over this time frame that the lows stayed above the highs. that's telling us something very simple, is that the VIX is getting stronger. Naturally, well, if the VIX is getting stronger, then what is happening to the SPY? So what I can do is I can just copy this, go to the SPY, go to the 3-month chart, and then paste. Look at what happened to the SPY. The SPY naturally started to decrease. It went from here, and it started to basically go straight through until about there. As you see inside of this horizontal time frame, we see a general decline in the SPY. What I'm saying is that you can utilize indicators such as VIX, where when this goes up, when the lows are going above the previous highs, we can essentially say with relative certainty that the SPY will be decreasing. And that is what we see in the past few months. So what do you do? As a young person, you are going to do something called priced cost averaging. Priced cost averaging simply means when you see this indicator of the VIX and you notice that this area here, specifically we're focusing on this area here, when you see this area happen, you start to buy. And understandably, this time frame, what was this time frame exactly? Let's just say early March. So if we go to early March, you can see this is not the lowest of the S&P 500. It is nowhere near the lowest. As if you are buying in this area right here, you are nowhere near the lowest. But what we care about is that you start buying now and you continue to buy. So potentially you bought in a few areas. Let's just say, let me delete this. Let's say you bought here. Let's say you bought here. Let's say you bought here. And then let's say you bought here. All right, if you bought in these 4 times, when you dollar cost average these, you probably get a really good price for the S&P 500. And that's what we care about, is we care about finding the right price. Because as you see, it is constantly dropping. You cannot predict the bottom, and you never will be able to predict the bottom. If anybody ever tells you that you can predict the bottom, they're lying. What you are trying to do is you're trying to set yourself up for higher highs, not lower lows. And if you were to dollar cost average, you probably would have averaged out somewhere around here, and you would have gained all of that value. And that is the point here, is you're trying to gain this value. Generally speaking, though, this is going to be a longer term value. When we are talking about young individuals, we are not focusing on making money today. We're focusing on making money 10 years from today. So the whole point of looking at these indicators is seeing if you can get a little bit of a discount. And that's the point, is you're going to try to find a little bit of a discount. What we know from the US stock market is historically, it increases over time, no matter what. If we zoom out to the past 5 years, within the past 5 years, we have had not 1, not 2, but 3 major pullbacks. All right, wait. We've had 3, what the heck? Come on. We've had 3 major pullbacks. All we care about is that we are buying when it's pulling back, because we can almost certainly say that on a historical average that it will go back up. We are not trying to predict the market. We are not trying to game the market. All we are trying to do is set ourselves up for success. So now for the riskier individuals, what we can start to do is we can start to find growth-based companies. This is going to be this list of information on the right here that I'm moving up and down, is the order of the percentage of my portfolio. If it's higher, it's the highest percentage of my portfolio. As you see, the SPY is the highest percentage of my portfolio, and then the rest goes down in order. As you see, in this lower end here, I have a lot of tech-based companies. Light, Micron, ASML, TSMC, and IONQ, or essentially supercomputers. What I am doing now is that I was buying these companies during these downturns because, as you see, we have a humongous increase of value within the past year, 2,000%-ish, give or take, in the past few years. With that, obviously, very few individuals have predicted that this company would go insane. What we can say is we want to take advantage of the SPY hesitating. Light, Micron are all companies that I bought within the past few weeks, few months. So if we look at the past 3 months, we're seeing here that I am up somewhere around nearly 100% for MU, and I'm up about 50-ish% with light, give or take a little bit, 25-30% for light. ASML is a little bit more flat. We're not trying to go too crazy. We can't do everything perfectly, but generally speaking, I'm taking advantage of that by these companies slowing down during the down period, right? As we see early March, we saw this natural decrease for MU. That's when I started buying it. And since then, it has gone pretty dang crazy. So, the whole point is finding companies that have very strong recent historical data. As you see in the past 5 years, Micron's gone crazy. In the past year, Micron's gone crazy. Finding these companies that are going on this historical data and taking advantage of that situation. With that, another company that I've been investing into rather heavily is Microsoft, due to it being a very, very strong historical company. If we go to all time, it's up thousands upon thousands of percent. But what we care about is what's happened in the past year. In the past year, it's actually dipped pretty significantly. It's dipped somewhere, I think, around 20%, 30%. Yeah. The whole point, though, is that what I knew was that in March timeframe, right, in this area here, we see this rather large drop. And what we care about is trying to buy during that time. And obviously, since then, it has been rather beneficial in that area. Overall, though, what we're trying to utilize is evidence to create essentially suggestions or ideas, and then follow up on those suggestions or ideas. So what I'm saying is I took an indicator like VIX. I found where the highs were below the lows, realized that that means that the market is selling off and it's been healthily selling off. That indicates to go find some value buys. And the value buys I saw were in rather high tech, or I guess you want to say growth-based companies. And the idea here is to, again, not time the market, but to find a value that you can utilize and set yourself up for success 10 years from today. So, I hope that explains some basics inside of investment, especially long-term investment. But again, 90% of individuals stick with your VEAs, stick with your VOOs, VTIs, stick with those. Okay? Talk to you later. Have a great rest of your day. Sleep well, eat well, have fun.